This is Back Roads of Illinois server to farmers and ranchers in central Illinois. Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We were glad you're here on KSIR in Fort Morgan, Colorado. We were glad to have our new affiliate of this show on KSIR in Fort Morgan, Colorado. I am Cesar Delgado. I am your host of today's program. On this weekend in the Midwest and Central U.S., we are going to have a conversation about the commodities markets and the planting intention report on Monday. We will be talking with Joe Camp for Comstock on today. The Markets Club podcast is coming for today with Ben Brown from the University of Missouri and Clayton Pope from Pope Commodities. We were talking about the Brazilian crop production and planting intention report with Brian Basing from Advanced Trading on Back Roads of Illinois YouTube page for the Markets Club. Otherwise, this is your rural news sponsored by AgriGold. The Grain Stock Quarterly Report is coming out for Monday at 11 Central Time from the USDA. The cattle on feed report is lower for last week and the report for last week. This could be lower than previously estimated. Finally, that National Corn Growers Association is underway in Washington, D.C. Their top priority is the Farm Bill and 45Z guidance line. I talked with Chris Edgerton from Iowa. His top priority for the commodities markets, especially with the Farm Bill. That's your rural news sponsored by AgriGold. We are excited about our new affiliate on KSIR in Fort Morgan, Colorado. Give a shout out to Alec Creighton. Thank you to Alec. We were talking with Joe Camp for Comstock on today. We were talking about the commodities markets, especially with the acreage report on Monday. I am joining with Joe Camp for Comstock. Hey, Joe, how are things?
Hey, good. A lot going on in this market. A relatively quiet week, but we kind of know it is the calm before the storm because of what you mentioned, the big acreage report on Monday, also a grain stocks report. So we can kind of get into those expectations and how they'll influence the market. But then, that's the last day of the month, first day of next week. 2 days later is we'll skip past April Fool's Day, the tariff announcement day, and that's the next round of potential impacts from that a bit of news, which has been, of course, relatively speaking, this last couple of weeks has been more quiet. So we're just in wait and see mode, and yeah, doing well otherwise, and glad to be joining you to talk about all this.
Yes, of course. It's pretty busy for next week in the agricultural world.
Yeah, a lot going to be going on next week for all that we're waiting on this week. It could be a little drastically different in terms of quiet, mixed markets giving way to whatever direction and potentially increased volatility. And when you have the tariff factor in play increasing from now, and there were some of those new announcements for imported automobiles last night, but you have next week that April 2nd deadline that I mentioned, also having all these major ramifications for the outside financial markets. And of course, we've been keeping a close eye on like the stocks and just what they're saying about the economy, along with interest rates. That last Fed meeting recently, having digested that for the most part, watching the dollar as always. Um, so a lot of moving parts that have their next shoe potentially dropping now next week.
Joe, corn acreage is 94 million acres in the Midwest. What is your thoughts with that number?
Well, that number is from the February Ag Outlook Forum, right? And that's our last bit of information ahead of Monday, the prospective planning survey. So we bring up that it is a survey-based estimate. Can certainly track differently with what the group got together and put out in February. Last year, most years it does deviate. Last year, it was actually USDA coming in on the low side relative to February on both corn and soybeans. And I wonder if that's not the surprise. And I say that just because everybody's seems to be leaning towards this 94 plus, and that tracks with the average trade guesses that I view out there, just half a million or less above 94. But those outliers out there that would bring up something like 95 million and a sizable increase then over the 90.6 that we had this last season. My thought is actually generally that we can be pretty close to that 94 million. So he's just potentially slightly lower than what I'm seeing again in the average estimates or the consensus out there on corn. But not to say that soybean acres estimates have to go a lot higher either at just a hair under 84 million acres. And that's an outstanding question is if this report is something that kicks off a price correction of sorts, like we had just a small taste of today with the soybeans higher while the corn was down. Do we have that correction where soybeans can strengthen because of the response to fewer acres? We'll know more starting Monday, 11 a.m. Central.
How about the beans acreage versus the corn acres, Joe?
Yeah, that's where this big switch is going to impact the ratio for soybeans to corn and potentially be the inflection report, like I mentioned, for prices. But we can go back to why, for one, this is the case, and it's a response to the prices that we talk about maybe being close to a correction back in the favor of soybeans. Now, there's a lot going on the demand side that has leaned less friendly for soybeans over corn. So that would associate with the tariff influences for one, and this idea that China, the top customer of U.S. soybean exports, is going to be way more sensitive to the tariffs than, for example, so far Mexico and the other corn buyers have been, which is not as dependent as a portion of corn, even with the top buyer Mexico, as we are for soybeans in China. But so that's the demand side of it. The other end of it is this price response, and that can follow February, where the crop insurance averages, for example, were just a touch higher for corn and about $1 lower for soybeans. And that's where we're at now. Now, what could change? And that's weather for one, and that's the next big factor. We're really transitioning our focus, and this next week's report helps do that. We do have the grain stocks report that I alluded to, talked about. That is a really good gauge of how we're using the old crop, but the focus on this prospective planning side of the report day really as late last week there was a reversal down from the top end that looked a bit bearish. We had a couple of days of correction type action, although then it got volatile again. So it wasn't just a correction lower. It was like even today's session, Thursday, a large break for the board before a significant flip and recovery for many contracts, and outside reversal day up where we're lower and then higher than yesterday's range in bullish fashion. So that technical outcome, if you will, is dependent on the fundamentals that you ask about, and they're bullish because of last week, the surge higher for cash trade, and that following and aligning with the surge higher for beef cutout values. And this idea that all of the supply side still leans positive when you talk about slow to rebound for retention, plus curbing of imports of cattle from Mexico and Canada recently, maybe some eventual blocking of beef from Brazil, for example, as we talk about these tariffs coming up. And on the demand side, you'd have to call it really resilient when you look at consumers of beef and weathering the storm, if you will, of all of these growing recession fears that have recently come about. So the cattle market's still very sound, but not necessarily also something that's going to be up here forever or keep going. So we're having a lot of conversations about the cattle for sure.
How do you expect to have the prices for the feeder cattle?
So feeder cattle are also, the ones surging. They've been the relatively stronger one for a while. Feeder's the leader. They right now, I mean, fundamentally lean bullish, similar to the previous thoughts, in that they have a discount open to the cash index, where the cash is mostly trading. The board has opened up that discount again in a way that should support prices now. So we need to see a crack in something bigger inside of the cash market before you can get overly bearish this market. Now, being overly bearish, the feeders is different than what can also be respecting of the move and wanting to reward the rally. So again, those are the conversations we're having right now is appreciation of the fact that it can keep going, but also knowing that we can fast forward weeks or a few months and that these can be really good levels as hedges, but different for everybody and risk abound for sure.
Do you have any final thoughts on this spring?
Well, the spring is going to hopefully be guided by the core fundamentals of supply and demand, and they're all influenced, by everything in these outside market factors that I'm going to bring up. But what I really mean is that prices go, higher or lower based on some reasonable assessment of crop supply and coming up the risk of the planting and early growing season that normally provides better pricing opportunities in that lead up to, say April, May, early June. And also on the other side, the demand and how we're using these crops, whether we can continue to keep robust export paces despite the tariff influences, or that we can ramp up ethanol fuel and get some of that certainty on biofuel policies in general. I think that's what I want to be talking about, hopefully, rather than, oh, the stock market's crashing, the economy's faltering, we don't have any, investment demand in the space, or those type of factors that can get in the way. So that's what can be a real risk point. It's something we're watching out for, sort of hopeful that that's not the general case and the general threat to the farm economy. But the big question, I think, that's on everybody's mind this spring, and I think I can leave it with some optimism and ultimately feel like we are going to get past a lot of these events like we have in the tariffs next week. Even the crop report will have our focus on those items of, for example, again, weather risk that make it feel more like a normal spring and do therefore provide us some of that normal upside for grain prices.
Thanks, Joe.
Yeah, thank you. I'm glad to be back on Backroads here with you. Appreciate what you're doing.
We've been talking with Joe Camp for Comstock. Thanks to Joe Camp for Comstock This has been Back Roads of Illinois. I am Cesar Delgado. You have a great weekend.